But joining me to break down what we need to know is Adam Coons. He's a Chief Investment Officer at Winthrop Capital Management. Adam, it's great to see you this morning. And what is your take on where we stand right now for stocks?
Yeah, thanks for having me. I think, this has been obviously a fantastic year for stocks. This is 2 years in a row that we've had, above double-digit type returns in equities. And in some ways, we're clawing back what we lost in 2022. And so right now, I mean, obviously valuations are a little bit on the, kind of topper end, but markets still feel relatively healthy. Earnings still are healthy, and so I think we're pretty fairly valued right now. Markets just as a whole don't give us a lot of angst. There are external factors that do, and so I think that's what you're going to see kind of in this fourth quarter is those external factors, the black swan so-called events that are kind of circling the markets will be a lot of the focus for investors this next couple months.
Interesting. So the stock market up double digits in the past 12 months. We know that September and October, historically volatile times, but the market gained in September and is looking to try to eke out a gain in October as well. Pretty impressive, Adam. So you mentioned black swans. Give us a little glimpse of what those could be heading into year end.
Yeah, I mean, I think that the most obvious is the election coming up. It's another contentious election. And so I think, the results of that ultimately won't matter. But I think in the short term, it could have an effect on markets just from the uncertainty. Markets tend to kind of like what they've known in the past. So if there's increased uncertainty, you're going to see volatility obviously pick up. And then when we look abroad, there's obviously the geopolitical issues that have kind of come and gone in waves, but they haven't gone away. So the issues in the Middle East, the issues in kind of Russia, Ukraine, those continue to be just events that we have to know are out there. They're not things that should affect the way you're investing, but I think they do, as they kind of start to build, as they layer on top of each other, it should give investors this a little bit cautious tone as we head into year end. Obviously, on top of that, we've got the Federal Reserve and the decisions that they're going to make heading into year end. So that's kind of the cherry on top of all of this is the Fed.
Of course, earnings coming in mostly exceeding expectations, of course, for the third quarter. Economic data showing that the economy is still growing. Consumer sentiment, in fact, very strong. Consumer sentiment, we learned earlier this week, up 11% in the latest read, the fastest acceleration since early 2021. We'll get that all-important jobs report tomorrow. All of these data points, Adam, we know will inform the Fed next week when it meets next on its rate decision. What is the path that you anticipate we'll hear from Fed Chair Jerome Powell when it comes to borrowing costs?
Well, yeah, you nailed it. I mean, earnings have been better than expected. Now the bar was set a little bit lower, but the consumer is the kind of highlight here. They have continued to be resilient, bucking the trend of economists that thought that they were going to be the thing to push the economy to the downside, and it just hasn't happened. And so I think that does have to affect how the Fed takes action or doesn't take action. The markets have gone back and forth about how many rate cuts that have been priced in, and right now they're still pricing in at least 2 more cuts from the Fed. I think that's going to be a hard case to make for the Fed. I do think we'll see at least a 25 basis point cut in the next meeting, but I think after that it's going to be really difficult unless the economic data rolls over sharply. It's just hard for me to see how the Fed can have a narrative to the market that they should continue to cut interest rates. So I think we'll see one more just to kind of give markets a little bit of ease, and that'll help reduce a little bit of volatility going to year end. But like I said, after that, I think unless we see some dramatic change in the economic data, dramatic change in the way the consumer is behaving, I just don't see why the Fed would cut rates.
Adam, great to get your take. Thank you so much for getting up early with us here on the East Coast. That's Adam Coons, Chief Investment Officer at Winthrop Capital Management.